All right, let's get right down to it. Cutting your expenses is essential if you want to achieve financial independence. But the most important thing that you want to do when you're cutting your expenses is to cut down your expenses with minimal sacrifice to your life. You still want plenty of enjoyment in your life. And yes, some spending can equal enjoyment in your life. And that's why in this video, I'm going to give you the full guide on how to reduce your expenses for financial independence in the most important way without sacrificing any fun. The first thing that we need to talk about is we need to talk about major concepts that you need to understand when it comes to reducing your expenses for financial independence. And I have 5 major concepts for you right now. Now, the first concept is to change your actual mindset when it comes to spending. Okay, so the spending mindset that you should probably have is that your money is equal to your life energy. So it took you a lot of time and energy and effort in order to obtain the money that you currently have. Let's say you make, $40,000 per year. That $40,000 per year didn't come from nothing. It came from you working probably 40 hours per week, 50 weeks per year. And so all of that income can be then translated into how much time you spent into it. The best way that I can describe your money equaling your life energy is actually from this book that is really great for financial independence called Your Money or Your Life. Okay, it's a really popular book that came out and is really popular in the financial independence community. And if you haven't read that book, you probably should. It's pretty awesome. But in that, the primary author is Vicki Robin, and she says that basically all this time that you spend in order to get this money is very valuable. You're actually using up your life energy in order to get this money. And so you can definitely look at your spending as you utilizing your life energy. And so if something uses this many hours of your life energy, is it really worth it to buy that item and to spend money on that thing? And so that's a really big mindset, mindset shift that you might need to make in order to achieve financial independence when it comes to cutting your expenses. Is it worth, working for 1 whole hour in order to pay for this cup of coffee or whatever it may be? So that's what you need to do, is to try to translate the actual income that you have, the money that you have in your account, the money that you are spending, into how much life energy, how many hours of work, how many hours of time it took you to obtain that money, and is it worth it for you to go ahead and give up that life energy for that whatever thing that you are about to buy. So that is a really important major concept to understand. The next important concept to understand is to think in terms of percentages and not necessarily dollars. Okay, so the reason why with financial independence, it's a lot more important to think of percentages rather than dollars, okay? And that has to do mainly with your savings rate. So for financial independence, your savings rate is a percentage of your income that you are putting towards your investments, okay? And one way that you can definitely see this has to correlate with when you want to retire early or when you become financially independent. It's going to be based on how much money you are putting towards your investments, also known as your savings rate. And Net Worthify is a really great calculator for looking at that. So for example, if you make $60,000 per year and you're spending all of that money, if you instead start to save $100 per month of savings, that's $1,200 per year of savings. And if you divide that $1,200 by your $60,000, that is a 2% savings rate. But instead, if you are spending $30,000 per year, making that, and you have that same $100 per month of savings, that is going to be the same $1,200 per year. But the $1,200 per year divided by the $30,000, that is double. That is 4%. So the same $100 per month, the same $1,200 per year, depends on how much you invested in your income. It's going to depend on what your income was in the first place. It's all about the percentage. So even though both hypothetical examples, $30,000 per year, $60,000 per year, even though both of them theoretically contribute $100 per month, the $100 per month from the $30,000 per year was much more powerful when it came to achieving financial independence and when it comes to achieving anything. So if you reduce your expenses by $100 per month, that was a 4% change on $30,000. If you reduce your expenses by $100 per month when you're making $60,000 per year, that's only a 2% change. So that's pretty dramatic. It's double the rate of change because the income was double in that circumstances as well. So think in terms of percentages rather than dollars. It's going to get you pretty far when it comes to financial independence. And concept number 3 here, when it comes to minimizing your expenses, is to actually track your spending. Because if you're not tracking your spending, then you have no idea where you're at. You have no idea where you're going. So tracking is one of the most important things that you can do, especially when it comes to your expenses and your finances in general. And luckily, you can make it super easy. You can make it as easy as possible. That is what I have personally done in my life. So I try as much as possible to automate everything in my finances. And one way that you can actually do that is through utilizing some free free online software where you can link up all your accounts and you can, track your budget, you can track your investments, you can track your spending all in one place. And one place that I like to do that is Personal Capital. And if you want to use Personal Capital, give it a try. Go to oncashflow.com/resources, and on that page, I show a few reasons on why I like to use Personal Capital. You can just click through to that to check out Personal Capital. Personal Capital is an affiliate of mine, and just by visiting oncashflow.com/resources, just by clicking through to Personal Capital, you are helping to support me and my channel, and it will cost you $0 to sign up and use their free online software to track all of your finances in one place. Because tracking your finances is super important when it comes to minimizing your expenses for financial independence. Next up on this list, we have number 4, and number 4 is to utilize the Pareto principle. Okay, so I really hope I'm saying the name right, but basically that Pareto principle is that 80% of the consequences come from 20% of the causes. Okay, and that might sound a little bit difficult to comprehend, but basically what that means in terms of, minimizing your expenses, that means that 80% of your savings are going to come from 20% of your choices. Okay, and so basically that means that you need to focus on what 20% of choices that you can make. What 20% of choices that you have to make are going to affect 80% of your savings rate. And believe it or not, it is pretty close to that. There are some really big things that you can make that you can actually make a very big difference in your savings rate and a very big difference in your spending. And that is mostly going to be revolved around the big 3. Okay, the big 3 expenses are housing, transportation, and food. So those are the 3 expenses that you want to get down to the bare minimum with very smart ways that you can do that. And those are going to probably have the biggest effect on your spending overall, because those 3 expenses make up the majority of your expenses already, probably, and most likely. I know they certainly do for me, and so that's why utilizing the Pareto principle when it comes to minimize your expenses is really important for financial independence and for making everything actually pretty simple. Lastly, number 5 of the major concepts you need to know before we start making actually concrete steps. This last major concept is to permanently eliminate or permanently reduce a lot of your expenses. So this is going to be a lot more powerful when it comes to reducing your expenses overall for the long term. A permanent elimination would be ideal. Eliminating an expense would be the most ideal, but you can also permanently reduce expenses in some circumstances. So here's an example of permanent elimination. Getting rid of your cable bill and then never using cable again. All right, switching to one of those online video providers, $10 a month versus the $50, $60, all the way up to $100 per month for your cable bill. So that is just eliminating an expense completely. But there's also ways that you can reduce your expenses permanently, such as switching phone providers. If one phone provider you pay $50 per month and you can go to another one and only pay $25 per month, well, that's a permanent reduction of a current expense that you have. And there are many different examples that you can actually do and utilize in your actual life to do that. But it's really important because this is going to have very little effect on your actual quality of living, and instead it's just going to keep your core fixed expenses very, very low. And by the way, if you're liking this video so far, please make sure you actually like it and give it a thumbs up. It really does help me out, and I really do appreciate that. But now we can move on to the actual action here, the best course of action that you can take if you want to minimize your expenses and achieve financial independence. And these big action steps that I have for you right now, I have 5. That was 10, not 5. I have 5 really great action steps that you can take in order to reduce your expenses and eliminate a majority of them. Now, the first one is going to go back to that big 3. So the big 3 again was housing, transportation, and food. So this is the most important thing that you need to do. Okay, pretty much before you do anything else, this is probably what's going to make the biggest dent in reducing your expenses. Okay, reducing your housing expense. One of the best things that you can do is to offset a housing expense with income. A big example of this could be like getting a roommate, or having a house hack with a multifamily, or finding some other way to house hack, basically where you try to eliminate your housing expenses or keep them very, very low. The next one is transportation. And transportation, one of the easiest things that I can just say right now is to reduce the amount of cars you can take, because that's probably one of the most expensive ways that you travel. And so reducing your transportation expense is reducing the number of cars is probably the biggest effect that's going to have on reducing your expenses. If you're a family that has 2 cars, 3 cars, getting down to only 1 car is going to have a dramatic effect on the amount of money you spend every single year, that's for sure. And lastly, number 3 is food. Of the big 3, food is very expensive. Just by eliminating the amount of food that you eat out and instead cooking more at home and shopping at a low-cost grocery store, I like to use Aldi. Aldi is really, really cheap, but it has everything you need in there. Just by doing a few small things just like that, you can dramatically reduce the amount of money that you spend on food. So that is definitely action number 1, is to focus on those big 3. Action number 2, again, I have to mention it, is to track your spending, okay? And when you're tracking your spending, what you want to do is actually budget in a way that you budget to zero. So every single dollar that you have, every single amount of income that you make, it should have a purpose. So you should assign something to all of that income that you make. You know, it's either going to be spent, it's going to be invested, or it's going to be saved for something to be spent on later. Okay, so you should definitely assign every single dollar that you have. I think it's called zero-based budgeting is what they like to call in fancy finance terms speaks. And then, by the way, like I mentioned earlier, you can use personal capital on cashflow.com/resources. It's a great way to track your spending without having to pull out the spreadsheets. It happens all automatically and in the background. Very little work is required on your part if you utilize free online software. Really, the big picture is all that matters here. It matters how much you spend total, every month or total in every year. So that's going to matter a lot more than what you spend on each category. Spend on each category as you see fit, as you want to, what's going to bring the most value to your life. And that's going to be different from all of us. Some people actually might get more value from spending more money on their cars, more money on their houses, more money on their food, okay, than others. And so it's okay to have categories that are higher than normal. That's perfectly acceptable. What really matters is the overall spending. So that is what your main goal should be, just to meet an overall spending goal. And next up, we have number 3, in order to minimize your expenses, and that is to focus on your taxes. Reduce the amount of taxes you pay. And there's so many different ways that you can reduce the amount of taxes you pay. And of course, I don't have time to explain all of them. But one of the biggest things that you can do is reduce your federal income taxes. But also, depending on where you live, you might also want to smartly reduce your state income taxes, okay? Because some states, they don't charge any income taxes. Other states, they have tax rates as high as 13.3% or something like that. So you definitely want to reduce your state income tax. And then again, another tax that you probably pay almost every day is your sales tax, depending on where you live. Some states don't have any sales tax, lucky you. But some states, they do have sales tax. And just by reducing your spending in the first place, you're automatically going to reduce the amount of taxes you spend on sales tax. And sometimes also sales tax doesn't apply to services. Sometimes it only applies to, physical items or something like that. So just learn the sales tax in your own state and see, maybe you can actually reduce the amount of spending you have just by reducing the amount of taxes you pay by just putting your spending in smart different ways. And next up, we have number 4, and this is part of the big concepts that was mentioned earlier, and this is the permanent reduction part. So permanently reducing, that is something that is very important. It's one of the easiest things that you can permanently reduce is your insurances. So pretty much like every year or every so often, you should probably shop around for new insurance. This includes all your insurances, probably like your car insurance and your house insurance and whatever other insurance that you have. It's really cool because you can actually just shop around to a new provider and you can reduce your expenses permanently just by changing insurances. Another thing that you can really easily reduce is your cell phone bill. Okay, so a lot of people, if they have the major carriers, they might be paying a lot more for their cell phone, but there's lots of smaller carriers that are out there that offer very similar services for much cheaper of a price. If you can go from $50 a month to $25 a month for your cell phone, that's a pretty significant permanent reduction in your bill. Another great one would be your internet. So you can easily shop around. If you live somewhere that has multiple internet service providers, they will want to compete with each other because they want your business. And so you could use that to your advantage and shop around for a new internet service provider and find a lower rate and permanently reduce your expenses that way. Another good one would be with any other kind of subscription. So I don't know what kind of subscriptions you have, but if you have some like subscriptions, online subscriptions, you might want to either cancel or permanently reduce those by lowering the kind of category you have. Sometimes you can have different tiers. You can lower the tier. You can also eliminate it completely, which I'm going to talk about next. Another way that you can definitely make a huge dent in your expenses when it comes to spending is you can minimize your expenses by permanently eliminating expenses that you already have. And one of the easiest ones that I must say, like I can't get away without saying this, is that you should never pay any fees to have a bank account. Okay, so if you ever pay fees for your bank account, like a monthly maintenance fee or like an overdraft fee or a low balance fee or pretty much anything like that, then you should definitely get a new bank. Okay, so that's something that really, like, one of my biggest pet peeves is to pay fees to a bank. They should be honored that you're putting your money with them, and so they should never charge you any fees. And by the way, if you need a new bank account, I also partnered up with a bank that I really love to use, known as CIT Bank. And again, you'll just go to that page on cashflow.com/resources, and you can see some really great reasons on why CIT Bank is awesome. It's a completely online bank account, and so they don't have any of the overhead expenses that traditional like brick and mortar banks have, and so they are able to offer really awesome interest rates, and they're also able to offer no fees in those accounts, and you never have to worry about the fees. But moving on to more permanent eliminations, you can permanently reduce warranties. You should probably never really buy a warranty in the first place. They're usually just there to make extra money for the person or company that is supplying the warranty. Another one would be storage units. If you have a storage unit, then you probably have too much stuff. Please get rid of your storage units. That's another permanent elimination. You shouldn't be paying $100 a month to store stuff that you never use. Another good one would be a landline. If you still have one in your house, no one calls it. No one pretty much uses those anymore if you have a cell phone. So just eliminate the landline. It'll save you some extra money. It's a permanent elimination. And then again, I mentioned this before, but cable is becoming obsolete. You know, with all the streaming services we have, there's a lot of them that are free. There's a lot of them that you only have to pay like $10 a month, and you have access to way more stuff than you'll ever be able to watch in your lifetime. Thank you so much for watching this video. I'm Zach from OnCashflow.com, and I hope to see you next time.